Welcome to Integral Talks, a podcast series brought to you by Integral Advisors, where we dive into the world of compliance, risk management, and due diligence, and provide you with expert insight and analysis to help you make more informed business decisions. Hello and welcome back to our podcast. I'm your host, Alberto de la Portilla. As always, thank you for tuning in to Integral Talks and thank you for subscribing. This month, we continue our recent series on forecasting the impact of the second Trump administration on different sectors of the economy. Last episode, we covered mergers and acquisitions between the U.S. and Latin America. Today, we'll be talking about the financial sector and how the regulatory and compliance environment may be impacted by Trump's policies, vision, and priorities. It is expected that between anticipated deregulation, changes in how regulators supervise banks, a shift of focus away from Russian oligarchs and related sanctions, and a more open landscape for the crypto industry, traditional financial institutions in the U.S. can and should be gearing up for a lot of action in the coming year. Add to that the fluid nature of global conflicts that could alter the priorities of the Treasury Department's Office of Foreign Assets Control, or OFAC. Throw in a few currently unforeseen circumstances, and 2025 is certain to be a year to remember for the U.S. financial sector. Will the disruption be a setback for the industry, or will it propel the banking system to new heights? I'm very excited to have Patricia Hernandez join the podcast today. Patty is the managing partner of Avila, a full-service law firm based in South Florida. She is one of the leaders in the firm's banking and financial services practice. Patty has dedicated her career to representing domestic and international banks and other financial institutions in all aspects of regulatory, compliance, lending, and transactional matters. Patty, welcome to the podcast.
Thank you, Alberto. I'm happy to be here.
It's great to see you. So you heard my intro. Let's start. So I know that you work a lot with not only folks on the compliance side and risk management side for a financial institution, but you also interact quite a bit with boards of directors, executive management, decision makers. So from your perspective, since Donald Trump returned to the White House, the general mood in the bank community or the banking community has been what?
Well, I want to say uncertainty. I think it's everywhere, right?
Of course.
It's a little bit of uncertainty. And I do think that there is a little bit of optimism.
Right.
And it's just because of the nature of the administration's view of regulations, right? And so I say uncertainty because it's very unclear how the administration is proceeding with respect to some of the regulatory changes that it's making, right? And we can get into that more in detail. I also think optimism because there is a feeling that there's going to be an environment of deregulation, right?
Yeah. And more business-friendly environment.
Yes.
Right.
Particularly, I think an environment where there might be a little bit, and there's been recent speeches, not necessarily from the administration particularly, but from members of the Federal Reserve, where there's been a movement towards a more uniformity with respect to regulation and enforcement of regulations and examinations. And part of the issue that sometimes arises with institutions is that there's a lack of consistency by the examiners on the ground sometimes. And so there's a movement, I think, from the Federal Reserve and others to potentially look more uniformly at some of the criteria relating to safety and soundness criteria and imposing a little bit more uniformity with respect to compliance matters. We all know that if you're a financial institution sitting in South Florida, where there's a perception of higher risk of their business, right? Because of the connection to Latin America, because of the connection to international business, you're regulated a little differently than if you were sitting in Iowa, right? And that imposition of a variety of standards is very frustrating for banks. And so I think that there is an optimism because maybe with the deregulation, there'll be a little bit more enforcement on a uniform basis of some of the regulations that exist and a movement more towards safety and soundness versus punishing institutions simply because of a compliance issue here and there.
Deficiency,
right?
yeah. So let's dive a little bit deeper.
There's a lot to talk about.
There is. Let's dive a little bit into you mentioned deregulation several times in that response. Where do you see kind of the low-hanging fruit deregulation happening immediately? I know things that we can't predict everything. We don't have a crystal ball, but just based on your experience, where do you see?
I will tell you two important places. One is, well, three important places. One is basically shutting down the CFPB, right? The CFPB is a creature, a regulatory creature, which is the Consumer Finance Protection Bureau, consumer-focused regulatory body. It is the regulator that promulgates regulations on consumer financial issues. They don't examine except for the very, very largest banks, but their regulations are the ones that other regulators use to examine smaller institutions. They also examine money transmitters and other types of businesses and mortgage businesses that they might be in to actually do on-site examinations. They're a creature that evolved after the financial crisis during the Obama administration. Depending on the administration, so it's been either very pro-consumer or it has taken a little bit of a step back during the first Trump administration. It really took over a lot of regulations that existed already that were in the authority of the Federal Reserve. So those regulations at the time that CFPB was created, they were moved over in the Dodd-Frank Act, they were moved over to the CFPB. That agency has essentially been shut down. The director that was appointed by the administration basically went and said, whatever funding there was for our agency, we don't need it. And it's shut down. If you look at their website, and they have a really great website, lots of great interpretive rulings and things. Thankfully, that part is still up there. But basically their website is not working anymore. And they went just last week. There was an announcement where they were basically terminating all of the employees. So that is one movement where it's unclear where those regulations are going to end up. In my mind, they're probably just going to merge back into the Federal Reserve. But that is an area where they don't exist anymore. There's not somebody that's looking over your shoulder on the consumer regulatory part. Right. The second is, so just yesterday, the FDIC came out and withdrew four proposed final rules. They also put out a statement with respect to a withdrawal of a statement that they had made with respect to how bank mergers were going to be evaluated for approval. This was just yesterday. I mean, every day is a new thing. I actually had a meeting with some of our associates this morning, and I said, look, we don't know exactly what the regulations are, but we have to know that when we're looking at something, you have to look at the latest and greatest information and giving advice to our clients. Correct. Because you can't just kind of do a search and say, oh, but this was the rules even 3 weeks ago. You can't rely on that. So you have to be very vigilant in looking at the regulations that apply. So the FDIC is clearly, taking a step back with some of the proposals that were out there by the FDIC under the prior administration, or the Biden administration, and we'll see how that plays out. At the same time, there's also uncertainty with respect to the regulators themselves, because it's unclear whether we're going to have the regulators, whether the FDIC will continue to exist or they're going to be merged partially into the OCC. Some years ago, there was a movement, there was a kind of a similar movement under Dodd-Frank, where the Office of Thrift Supervision that used to regulate savings banks, they disappeared. They were merged into the OCC.
Right.
So we don't know what's going to happen with the regulators. Honestly, we have no idea at this moment.
And I wanted to. I'm glad you brought that up. That was actually my second question. Is so yeah. There has been some talk and noise around agencies, merging, and so that would, in theory, result in people being removed from their positions, and whether they're a supervisor. Obviously, there's going to be redundancy. Do you foresee any kind of merging of agencies? At least going forward. I know it's some of it has happened in the past, but do you foresee an impact on enforcement and examinations, like to the extent of, more specifically, are they going to even have enough staff to do, to keep up with the schedule of examinations and obviously enforcement?
Well, who knows?
And I know we're both crystal balling here, right?
Yeah, who knows? There's already an idea that there has been a slowdown in pending applications. So applications that are pending, and by the way, by statute and regulation, many applications that are filed have a deadline where the regulator has to take action, right?
Okay.
So I don't know what's going to happen with those deadlines, but there is already a movement and a feeling that in some federal regulators, there's been a slowdown of the evaluation of those applications. There's also been, so they were already apparently short-staffed in the examination teams. So they had hired, FDIC at least had hired a significant number of examiners over the last 6 months, I would say. So anybody that was in a probationary position were terminated.
They're gone.
So all of those new people that might have been training to become examiners or already on the field as examiners, they're gone. So we don't know exactly. And I suspect that it's going to affect the capacity to continue to do their examinations as they were, I would assume. So it's going to be interesting. And again, it's kind of a crystal ball. We don't know.
Yeah. So I want to talk about this massive law that has been has a lot of support from law enforcement and FinCEN, and has had support from some members of Congress, but that seems to be changing, and that's the Corporate Transparency Act. There was recently news, I think 2 days ago, that the Treasury Department will not be enforcing the CTA's requirement for the UI.
The CTA was part of the Anti-Money Laundering Act of 2020.
Yes.
Yep. It is an act of Congress.
Yep.
Regulators and departments can choose to not enforce, I guess, and that's part of what the Trump administration strategy is, to simply say we're not going to enforce this or that. So in this particular case, and this was that it's unlikely that at the end of the day, and it's supposed to now in March, it's supposed to end up at the Supreme Court. But so there had been a lot of challenges to the CTA because it was deemed to be an invasion of privacy, and there was a lot of doubt as to what this information was going to be used for, and why did small businesses. It did put a significant burden on small businesses to respond, and it wasn't just being able to respond. It was having an obligation ongoing to update that information. It put a significant burden on those of us, like my firm, that form companies, we had like stopped forming companies because it was putting us, obligation for me personally to report myself as related to this company. And then what would happen, 5 years from now when I may not even be representing that client, and all of a sudden I'm still tied to that company and somehow responsible in a way. So there was a lot to be desired from that statute and that regulation. But, it was there and everybody was complying. There had been significant challenges. The courts had ruled in favor of it, against it, in favor of it, against it. It had come back just a few weeks ago. It had come back. And then the Trump administration and the Treasury Department basically said, we're not going to enforce it except one small part of it, which is foreign entities that register to do business in a state. Which is not the way that generally it's not the way that foreigners that come in to do business, they generally don't register their own company from the other country here, because that's not the way it works, because they could increase their level of liability here for this foreign entity that they register.
Well, and I'll add to that. I mean, if you have bad intentions to launder money, and you're a foreign actor, a foreigner, and you don't want that exposure either. So you're going to try to set up a U.S. LLC, hide and conceal your ownership through many different levels, and that's what FinCEN is trying to chase. I mean, that's really the target. They're not really focused on the small business, although they're all going to get kind of roped into that, because how do you specify only looking at those, for those kind of bad actors? But so I don't think that's going to have much of an impact, this pending what they're allowing now. But I wonder how a administration that is talking about pursuing in a very aggressively the drug cartels in Mexico, anything closer to home, how do you sort of reconcile that with this this act, this Corporate Transparency Act, and that requirement that, look, it's not like you said, I agree with you, it's not the best. There's a lot to be desired for, but it was a step in that direction for more transparency, and now it's being.
We're the only country,
right?
I mean, I wouldn't say only, but we're the main. We expect a lot from other countries and their legal systems, and yet we hide the owners of our companies. You can go to any public registry in a civil law country and know who owns a company. Anywhere. You could go to Colombia, you could go, because the owners are registered publicly. We don't have that. And in some states, you can't even see their officers and directors.
Like
State
Delaware.
of Florida is a little different, because you can go on the website and you can see who their officers and directors are. But there's an incredible amount of privacy that we offer those people that have businesses in the U.S. So it is definitely something that I think we needed to move, and we've taken that obligation and imposed it on the banks to determine somehow that the information that's given to them is true or not. There's a very high burden on the banks to be able to know their customer, right? And knowing their customer is understanding all of their beneficial owners, not all, but 25% or more is the rule, and understanding who their control people are. And yet that's not publicly available, and you're imposing a requirement on the private sector to kind of police what that is. So I agree with you. I do think that we needed it in a certain way. I don't think they went about it the right way for purposes of kind of capturing lots of people that they didn't need to capture in this rule. So we'll see how this plays out now. I definitely think, though, the Treasury Department has indicated that they're going to Congress to try to revise the statute. And there was already a proposal sponsored by Rand Paul that was the same.
To repeal it.
To repeal it, basically.
To repeal it.
To repeal it.
Yeah, to repeal it in its entirety.
Yeah.
I did see that. So, that's going to be an interesting uh, to look at how that plays out, because Justice and law enforcement is so supportive of it, FinCEN and all the agencies, with and for the desire to try to stay ahead to the extent that they can through understanding who's behind what entities. If they're investigating or if they receive a SAR, they can get there's information.
Yeah, and it might be having to revise. I mean, if they decide to go forward and revise it, there is an operating company exception to it. So if you have but the threshold is pretty high, so it doesn't capture, the mom and pop grocery store on the corner. It's not going
Right.
to capture large businesses. And maybe the trick is to modify it so that operating businesses, there's some further exception that makes those thresholds lower so that more people qualify for that exception. But who knows? Right now, they're not going to enforce it except for these foreign companies, and we don't know what's going to happen with it, really.
Plays out. I think that's a very interesting, that's a big piece of what's going to happen in this kind of risk management compliance world. And so I want to also talk to you about OFAC, the Office of Foreign Assets Control, the current administration's priorities. Obviously, the previous administration, following the Russia-Ukraine war, really focused on Russian entities, Russian oligarchs. Now we're seeing a pullback from Russian oligarchs. And we don't know. I mean, so far, I think even today, the only major OFAC action taken over the last couple, in my opinion, over the last couple of weeks has been just the issue related to Venezuela and Chevron being forced to kind of wind down its operations with PDVSA. But in terms of Russia and, now the administration is reshifting its priorities. How do you see that playing out for financial institutions that are involved in international banking?
Yeah. So the Trump administration, the first Trump administration, was one of the most aggressive in using. We have a guest.
We do have a guest. Oh
boy. The first Trump administration was one of the most aggressive in using sanctions as a method to achieve foreign policy. They issued more sanctions programs than any other administration in the past, and even moving forward. That is true. There were already Russian sanctions in place before the Biden administration, but of course, with the situation with Ukraine and the invasion of Ukraine, there was a significant uptick in that. And more specific oligarchs identified, and the sanctions now prohibit basically all business, mostly prohibit business with Russia, generally. So they've kind of become a pariah for purposes of international sanctions. So I don't know where that's going to go. I do think that Trump generally has this position where he would prefer to use sanctions than military. And I think that that's what he attempted to do in the first administration. I don't know how that's going to play out here, but there definitely is going to be a focus towards the Mexican cartels and potentially continue to focus on some terrorist states. So a greater focus, I think, Venezuela, that they kind of had opened a little bit and now it's shutting it again. So we'll see. There hasn't been a lot of movement from OFAC, which I'm surprised by.
Me too. Yeah,
very little.
Too, but I think I know
anything. Yeah. So we'll see what happens with OFAC. I do think that I hope that OFAC gets more funding, because OFAC, they take a long time to make decisions. It's hard because they don't have deadlines. Much like I said, the other regulators have deadlines. Like if you receive an application, you have to decide by X date. You could submit an application and have it pending for years and never even hear back. So there had already been a movement in OFAC to be a little bit more customer friendly. They changed their website and they changed the application portal, and now you can look up information, but it still doesn't, it doesn't move the needle with the speed that it needs to, I think.
Would you, again, it's hypothetical, right? So would you, a financial institution that decided that maybe had an active portfolio with Russian clients that are, residents of South Florida, which we know there are many, and perhaps pulled back during the last administration, just given the complexity of these sanctions, what would you say to someone like that? Again, we're talking hypothetical, no specific clients, but what would you say to them? Just kind of status quo? Let's wait and see,
I would say status quo right now. Yeah. I don't think there is, there really hasn't been any, and there really hasn't been any indication, even though there's been a lot of activity with respect to Ukraine and Russia and the whole settlement of the war and all of that, there really hasn't been anything from OFAC at all. So I would say it's probably either all going to come at once, or we're going to have to sit, and I don't think that there's anything that anybody can do right now to make a change in how they've been treating that portfolio of clients. I think it's really something that they have to wait and see.
Yeah, I think also a lot of it is, Trump's nature has been always one of, transactional. And so everything is, he sees the world as almost like a board game, and there's pieces and he's playing chess. And so maybe he utilizes OFAC and the threat of OFAC. Certainly you see it at Venezuela, just cutting off of Chevron, and essentially to try to, and I'm not sure what he's trying to accomplish, because you're right. A couple of weeks ago, there was a meeting between the envoy and Maduro. They shook hands. They accepted the prisoners from the U.S. There was no issues with that. And then suddenly there was a change. I'm not sure. But I think with Russia, there's been so much noise, particularly since the meeting between Zelensky and the Oval Office. And so I wonder how OFAC will have be used as a tool to squeeze Russia. But this whole thing about not just sanctions, but there's just one concept that we have been hearing more and more as we're doing, as we're assisting financial institutions, particularly in Latin America, that are looking to establish U.S. bank accounts, is not just AML assessments, but looking at their anti-bribery and corruption controls. A lot of that is coming out of what's happening in Würzburg and the Basel. Those questionnaires are now part of the AML questionnaire. It's like, would you have controls with respect to A, B, and C? So that trend has been coming for a while. That momentum is on international to try to curb, anti-bribery. And then we hear a couple weeks ago that the Department of Justice has shifted away, or it kind of dialed back a little bit, the FCPA enforcement of U.S. companies doing business overseas. And this brings me back to what you said earlier. We expect things of others, but not of ourselves. I think that's a great point. But I think the president signed an executive order requiring, I think the quote was, revised reasonable enforcement guidelines on FCPA.
Yeah. It's a 180-day kind of scaling back of enforcement to review. And there's a thought that it was making American companies not able to compete on the world stage like others do. So it's interesting, because we got a lot of calls from our bank clients saying, okay, so what do we do now? Do we we don't monitor for that? We don't look at, potential bribery? What do we do? And the law still exists, and the fact that they're not enforcing it, that doesn't mean that you should allow, you should be looking at your clients, I think, and figure out, all of a sudden, is your client going to start paying these bribes in other countries? And it's just it's really it's left everybody a little bit really just putting their hands up and saying, I don't really understand what this means and where this is going. I don't think that anyone should just take the position that, hey, you can bribe anybody you want and you could do whatever you want. I don't think
Right.
that that's the movement. I think the movement is we're going to scale back because there's a belief in the administration that there's not, enough reason. It's not reasonable, the enforcement of it, and we'll see. It's 180 days, so it's 6 months for them to come up with reasonable enforcement guidelines that make that, according to the administration, I guess makes sense. I don't know
Yeah.
exactly.
Well, I'm not surprised that you're getting calls from, from some saying, what do we do? What do we do about this now? And it seems like the best advice is, again, status quo. Just
Yeah.
wait and see what happens in 6 months down the road. But you're right. It's a law that's on the books, and I don't know maybe it's a 5-year statute of limitations. I'm assuming that's what it is. But if something occurs and you there might be a new president in 4 years,
Yeah.
and it might be a different political party.
Yeah.
And so they might have a different perspective about FCPA violations overseas, particularly if something blows up, right? And then
That's absolutely right, and it is. I think this has been the last month, right? Where the last month and a half, while we've been looking at all of these changes, there's a lot of changes that have to be done statutorily. There's not an authority. There's an authority to not enforce. There's an authority to change regulation, but there's not an authority to change statute, right? And many of these situations are in a statute, like the CTA, like
right,
the FCPA. So it's really a choice not to enforce, but that doesn't mean the law doesn't still exist. And so in the future, you're absolutely right. If there's a different party, a different president, a different position, even from this administration, then all of a sudden you're like, oh, I thought you weren't enforcing. I thought I could do whatever I wanted, but the statute was still there. So I think you have to be cautious in assuming that you can, and of course, those that will be aggressive, they will just go out and be aggressive about it, right? But I think if you're a conservative person that is looking at this situation in a measured way, that's the way you should look at it, in a measured way. It shouldn't be let's open the floodgates and let's go bribe people, or let's, do whatever. It's just not really. I don't think that we're in a position. It's only been a month and a half. We're not in a position to really know where we're going to land, even next month or in 6 months, I think.
Yeah, and I think the more immediate challenges for those corporations that are doing business overseas and have been doing business for years, and they've had certain policies and procedures. You can't take gifts, you can't take someone out to dinner, what have you. And now what? I think those are going to have more immediate need for some kind of guidance, because I get it on the financial side from the monitoring standpoint, but there's a little bit more distance between them and the actual act of, being asked to, for a gift, or and I wonder how these kind of, whether you're a public or privately held corporation that's doing business overseas and has done business a certain way, what's happening inside those corporate compliance departments.
Yeah, that's a really important point, Alberto. It just seems to me that there's not a I would think that those companies are not changing their position, at least not until those enforcement guidelines, the official enforcement guidelines, come out in 6 months. And then they can make some more measured, they can do their risk assessments, and they can figure out how to best implement any changes that come with that new guidelines.
Let me ask you just quickly on the sort of fintech or well, let's say crypto world. I mean, you hear a lot from the crypto community. You can read a lot from them. Very excited for Donald Trump as president. They expect and you could see it in the price of crypto. Do you see it? Do you see more openness towards that industry, more acceptance by U.S. regulators and U.S. Congress people towards crypto in the U.S.? Yeah.
To be honest, I think we've been avoiding, and I'm going to say avoiding, the proper regulation of crypto and fintechs. We have left it to, oh, you have to register as a money transmitter, or you register as a money service business with FinCEN. There is no real regulation of those types of businesses. And so to me, and in many cases, there is a please regulate us so we know what the playing field looks like. Right? Because things like FTX happened because there was a lack of regulation, right? Where you're gambling basically with the money that is in your hands in these wallets, and there's not a level of regulation where similar to a financial institution. But we've had our head in the sand thinking that this is either, I don't know, go away, or it's not gonna go away. And it's not. We are moving in a direction where fintechs and crypto exists, and people invest in it every day. And the fintechs do business with consumers all over the country. And you end up in a situation where the lack of regulation puts people more at harm because a lot of these companies are doing whatever they want, right? And you saw it with the situation with the failure of Synapse, which was a middleman between the banks and the banking as a service providers. It was basically a banking as a service middleman that would connect fintechs with FDIC insured institutions. And there was it's FDIC insured accounts. There's no risk. The risk didn't happen because the bank failed. The risk happened because the middleman failed. And those accounts were in the name of the middleman. So if the bank would have failed, there's FDIC coverage, etc. But the middleman failed. So you end up in a bankruptcy proceeding where they can't even figure out where the money is, right? What bank was holding the money? The ledgers are all wrong. And so what happened was that the regulators turned around and said to the banks, oh, you should have monitored these accounts better. You should have asked for more when you do business with a fintech, et cetera. But it didn't put any obligations on the fintechs, right? The regulations don't exist. So the regulations that exist is, and I do a lot on the fintech space. I get clients coming in from Latin America and that say, Mexico, for example, Mexico has a license for licensed fintech company. Many, many jurisdictions have federally licensed fintechs. And I don't know if it's the lobbying efforts of the financial institutions lobby, or they've tried to push away any real regulation and licensing, because it legitimizes an industry, I would say, that competes. But at the same time, you're in a situation where you're leaving them to do whatever they want other than get a license from the state where they have a bank account, or, they get an MSB account, an MSB license. And there's ways around it. So to me, the way that if this administration is going to take steps to legitimize and bring everybody under the fold of some level of licensing, some level of, control, that would be a good thing. Absolutely. For consumers, it'll be a good thing for the industry, I think. And so to me, we'll see how it plays out. But right now, there is excitement on the crypto side, and the fact that there's just on January 23rd, he signed an executive order, wanting the U.S. to be at the forefront of digital currency. So we'll see how that plays out. But I do think that I believe that it would be a good thing if we could at least get some legitimacy and licensing for some of these entities. If one of the regulatory bodies, and part of the crypto situation has been that the SEC and the Commodities Trade Commission have been kind of looking at each other and going, it's your problem, not my problem, your problem.
Right.
And so if we could get an agreement where somebody is going to regulate it, that would be a good thing. Because I also think that it would level the playing field for the highly regulated banks that kind of have all these out there competing without really any control, I think.
Yeah, and I think also there will be there's interest not only from consumers, but there's interest from investors, private equity firms that want to get into this space. And yeah, maybe they look to the Trump administration as kind of finally the pioneering administration in the U.S. to take it to another level. So I have one more question, and then I want to just leave a few minutes at the end to wrap up. But so I know you're also, as part of, not only on the financial services practice of your firm, you're also active in the mergers and acquisitions practice of your firm. So I want to ask you, kind of put that hat on, what to make of all this. Do you foresee, I mean, you mentioned earlier that there's been kind of a slowdown in applications for new financial institutions in the U.S. There's probably going to be potentially delays in getting those applications approved. I know there's a particular timetable, but putting that aside, do you foresee M&A work picking up in the banking sector? Do you see a consolidation frenzy, or what do you see happening?
Well, there's not that many, at least in the state of Florida, there's not that many banks to buy. So right. I do think that the movement will be new banks. And the regulators have been very vocal about the fact that they want new de novo institutions to apply and to move those applications forward. So when I said that there was a slowdown, it's really a slowdown in the review of the applications. But I mean, at least at our firm, we're handling a number of different applications for different, foreign banks coming into this country, mergers of banks, de novo institutions. So we have the first, at least in our county, our first de novo in 15 years. And so that's a good thing. So that there is an understanding, I think, by the regulators that there is a need for more community banks, which is different than the position that had been taken, after the financial crisis. And that's why we haven't had one in 15 years, because there have been others in Florida, but in our county, there hadn't been any. And it's because we lost a lot of institutions during the financial crisis. Right. But the movement towards more newer banks, mergers and acquisitions, I think there's a lot. There's a lot of, and we're seeing a lot of interest from foreign banks again to come into the country and open and establishing a presence.
Interesting. Okay.
But there aren't that many banks to buy anymore. So, when they want to, it's more like, let's form a new bank instead of let's find a bank.
Right. Okay. Well, that's interesting. So anyway, so I had a list of questions. We've covered all of them. And then I always like to end on a lighter note. And I always ask all of my guests a question that's near and dear to my heart, or a topic that's near and dear to my heart, which is music. I mean, you could tell I'm surrounded by music. So I want to ask you a question. I know just for the audience, full disclosure, I ran into Patty last weekend at the Montreux Jazz Festival, the second annual Montreux Jazz Festival, and on Friday night, and she was there for the same reason that we were there, and that is to see Jon Batiste, famous musician from New Orleans. So I wanted to ask you about Jon Batiste. I wanted to ask you what resonates with you about Jon Batiste, his music, his history, and you got to see him live, and I'm sure that was quite an experience for you.
It was really fantastic. I was very
talk to me about that. Talk to me about what he means to you.
It was really great, and I actually got to see him when he walked around. He stood right in front of me. It was fantastic. So the what resonates. I mean, I think he is I think he is blessed with an incredible amount of talent. And I love to see musicians that feel the music, and you almost feel like they are, and by the way, I felt that way about everyone that was on stage that night, because he brought along a lot of wonderful, even young musicians that were on stage with him. They're all so connected to the music. And I am not musically inclined. I love listening to music, but I've never been able to play an instrument, and I really can't sing very well. So to me, the fact that I just feel that's such a talent, and it's such a gift from God that people can have that ability. John Baptiste in particular, I actually first learned about him a few years ago when he was on, I think he was on the Grammys, and I saw him do Freedom. And I thought, wow, who is this guy? He is something amazing. And then since then, I became a big fan of his, and I try to listen to all his music. I also I listen. I find that his, the fact that he is a composer, a conductor, but he's just so also very, I love how he supports other musicians. To me, it's just he's a great example of what our musicians should be like. I think there's a lot of people out there that are musicians, and they're just there. They could be the pop stars or whatever. A lot of them are very talented, but to me, I think he's just he's supportive of the arts. He just seems like an all around good guy. So I really like him.
I think what he also brings, and we saw it last year and we saw it again this year, there's something uplifting about just being in his presence, right? And you can feel it. You could just feel it. There's something special. There's some energy in that room. And then he did it last year too, where he came out into the audience and he stopped and he played. Last year, he actually went outside. So imagine the restaurant next door got really excited. It was a tremendous experience this year. We loved it. Very different than last year. And yeah, also all the artists, not only the ones that are behind the stage with him, but the ones that he brings to start the show, the young kid, then the middle one, the Willow, who is the daughter of Will Smith and Jada Pinkett Smith. But what he embodies, and he talks a little bit about it. There's a cleansing happening here. There's a healing. It's almost like a spiritual experience. Like you could be in a church and you're listening to this one individual just take you to another level.
I feel he is very spiritual in the way that he performs, and it is almost like that feeling. And you said it to me when we saw each other outside before. You said it's like going to church, and I as I was sitting there, I was thinking the same thing. I could not. It was just so it was. I felt blessed to be there and to watch him. And I also admire tremendously his relationship with his wife, who is an artist and a writer, and she's been struggling with leukemia for years, since she was a very young woman. And they have a wonderful relationship. The fact that they have a documentary that was nominated, American Symphony, which I would highly recommend to watch it, because it really brings him down to, like, he is a regular person with a regular family. And the fact that he stands up there and he says that he feels blessed with the challenges that his wife has gone through and the challenges they go through, to me, it shows what faith, like, he just feels he feels blessed regardless of the challenges in his life. And I feel like we should all take that type of lesson when we all have challenges like that. So I thought he was fantastic. I was happy to run into you, and I was so happy to go there. So it was great.
Thank you for that. And anyway, so that wraps up our podcast. Thank you once again for tuning in, Patty. Thank you.
Thank you, Alberto. It was
talking
great.
To you.
I always love chatting with you, and so it's great to do it like this.
Just turn on the camera and go for it. And once again, if you liked what you heard or saw, please stay tuned for next month. We'll have another episode. We'll continue to bring you insightful episodes on what's happening with the Trump administration and how that is impacting different economic sectors. So stay tuned and see you next time. Thank you.
Thank you.